Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Benefits. A recent write-up in Barron's highlighted new AI technology that a firm called Broadridge is working on to help financial advisors better understand their clients, even predict behavior, and perhaps assess client loyalty. And with so many trends having been accelerated through the COVID period and work from home, I wanted to catch up with Mike Alexander, president of wealth management at Broadridge, about their use of artificial intelligence and get his take on what next-gen advisory practices look like. So with that, I'd like to welcome Mike. Welcome, Mike.
Hi, good morning. Thanks for having me.
Yeah, thanks for coming on. I found the article in Barron's, I think it was in January of this year, really interesting and kind of piqued my interest in terms of what you guys might be doing in artificial intelligence. But perhaps you can start out with a little bit of background on Broadridge and the wealth management division.
Sure. So Broadridge is a premier player in the wealth management space. We provide capabilities across the entire wealth ecosystem. We are actively engaged. Our mission is to really help advisors and help firms deliver a great client experience and help investors achieve their financial dreams. And we're doing this by delivering our next generation wealth platform, which is a end-to-end ecosystem from the front to the back office.
And what types of advisors are you working with?
Actually, it's across the whole spectrum. So we support, in a traditional sense, wirehouses, but also independents, RIAs, and we primarily focus in North America. What makes us unique is that you can take our solutions as a component, a bundle, or our entire ecosystem, and we're delivering the kind of flexibility that in one platform, firms could put their products, our products, and third-party products, and uniquely create best-in-class solutions that deliver premier service for their advisors and for their investors.
Now, through 2020, and there's all these trends that were accelerated because of COVID and work from home. What have you seen in the marketplace today? In terms of how advisors are relating to individual investors?
Well, I think it first starts with the investor. And I think what we've seen in COVID is the rise of the millennial and the next generation investor. And we've seen a huge influx of new investors. People are sitting home these days and, even like their COVID checks, I saw statistics that half of them are going to be put into the stock market. So what you're seeing is the rise of the millennial investor, the introduction of, I heard 10 million new investors in the marketplace next year. And then you're seeing over 1 billion people in retirement living longer and more rigorous life. And what that does is it's changing the whole nature of how people interact, right? So digital engagement is clearly no longer a luxury, but a necessity. And because it enables you to transform the wealth experience by delivering personalized service. And that's where artificial intelligence comes in.
In general, how did you see advisors do during COVID? I mean, did businesses thrive? Did they generally adapt to what was going on? Did you see differences in terms of adoption rates and success rates that different advisory practices had?
It's all over the spectrum is the answer. But the people that are successful are learning to utilize digital capabilities, right? And to deliver personalized content, education, communications, next best actions, all of those types of things. But the individuals and the firms that are using that. And we see that video is an opportunity that's just starting to arise, that it's not just about delivering content and education materials in a text or in an email, but also now to start to leverage video. We're also seeing through some of our surveys that there's a lot of dissatisfaction amongst advisors with the technologies they work on, and that they're losing business, and that's forcing them to think about leaving. So I think what you're seeing is there's a lot of clarity now on next generation investors, and they're going to be more collaborative, validating, and interactive, and want more communications. That's become very clear. What's also become clear is that advisors recognize that without these capabilities, they're not going to be able to compete. So I think you sort of see both ends of the spectrum.
And when you say video, are you talking about communication software like a Zoom or something like that, like we're talking on today? Or are you talking about delivering content, say, through video?
Both. But I think our surveying data shows that people would prefer to see videos. I mean, what it really shows is that people want things in a personalized way, and some people want video, some people want hard copy content, some people want it delivered on Sunday night via LinkedIn, but Monday afternoon via their work email. I mean, everybody, it's all about relevancy and personalization, but we see video as a very big opportunity. We have video capabilities today. We have libraries of content and education material, even things that you can introduce yourself to a client. So if you're meeting a new prospect, you can send a video introduction of yourself versus sort of an e-card or something, more traditional. And we're looking and investing into expanding that, particularly around personalizing the videos. So, we want to be able to see the kinds of behaviors that investors and advisors are doing, and then deliver to them lists of actions that they could take that would be suitable for that client or for the advisor themselves. And it would either be delivered in a video or in a more traditional media type of way.
So you mentioned being able to see a list of actions or behaviors. Is that through the AI technology I referred to and how I found you originally through the article?
Yeah. So the underpinning is AI, right? But the most important thing is the data that you have, because without good data, the AI doesn't really work. So it's a combination of data with intelligence, and then create algorithms around that deliver things in a hyper-personalized manner. So if you're looking at how do I fund my kids' college education, it wouldn't be appropriate to send you things about planning for your retirement. So you really want to use this artificial intelligence and the data to get as specific as you can about the client's interest. So if they're more interested in a private school versus a state school, or a 2-year school versus a 4-year, or an MBA, the more you can glean from some testing. There are firms that are now doing testing, of values and what people do, and then observing their history and their preferences and where they do things and the time of day. And then you bundle it together and deliver it in a hyper-personalized way.
Does this AI work? Is it mainly working on the advisor's own website? So it might depend on what content they already have on their website, or is it somehow assessing what they're doing outside of?
We could do it in a variety of ways. So certainly we could do it when an investor or an advisor is within their firm's framework, but we could also look in other places if we have the appropriate permission and security to do that. We can have other data that we have, and we can compare it and do things with it. But it's a wide range of data.
Okay, so it's not necessarily biased just by what you might have on your own website if you tend to be a 401k retirement specialist or something.
Exactly. But like anything in life, you're as good as the quality of your data. If your data is bad, your actions could be bad that come out of it, or your assumptions that come out of it.
And what are some of the attributes or behaviors you see that are warning flags for advisors that perhaps that client might be looking to leave, or they feel like they're missing something in the relationship?
So one of the things that we've developed is a capability. You could look at it from several different angles. We could look at clients who are dissatisfied, or we can look at them as highly satisfied and more loyal, right? And it's both sides of the coin. So we've developed algorithms that allow and that enable us to predict low satisfaction or low loyalty, and we can deliver suggested actions to help strengthen the relationship based on that. And we're able to predict this with 95% accuracy at this point, and it'll continue to get better. But we use it to help advisors connect with their clients, or have the appropriate warning signals or opportunities to strengthen the relationship. It could be used positively too. It also helps compliance areas, people who are looking out for a client's best interest. Their job is to supervise the advisors. So we use it in both ways. And we have the ability to score, risks or loyalty, which also helps, filter things, right? Because, some firms have millions of accounts, and you need to find the needle in the haystack. And the great thing about artificial intelligence and the algorithms we've built is we find the needle.
In terms of millennial investors and millennial clients, how are existing advisory practices doing in terms of addressing that client subset? Is there a risk of them losing it to new platforms, new digital only platform, say like a Robinhood or something like that?
I think there's a huge risk, but it's also a huge opportunity for advisors. And I'll talk about this on several dimensions. Large percentages of the people who are going to inherit trillions of dollars over the coming years, those people, whether it's the spouse, the children, the grandchildren, generally don't have an advisor today and are highly likely to fire, the person who passes away's advisor, right? So there's a great opportunity, particularly in COVID, when people are at home and you could use video now and other types of ways of communicating to really connect to the generations and the spouses that are going to inherit a lot of money. And so more advanced advisors are realizing that and making those connections. They realize they need to do it in a way that's comfortable to that. So millennial investors and even older generation investors like myself, they're increasingly, particularly the people that are going to inherit money, increasingly values-based investors. And what does that mean? Well, that means they buy the things that are in line with their values. So if they're not a smoker, they're not going to buy tobacco stocks. They're going to buy things that they, particularly the younger generations, that they use in their personal life. So like Tesla, GameStop, because they all play games, There's a values-based investor very focused on ESG type things, the environment and their personal life. And then they take the digital experiences they have outside their financial experience and expect it in their financial experience. So what does all this mean? It means that we have to shift towards the needs and the focal points of those types of investors who are going to inherit a lot of money in the coming years. And what's become clear in COVID is, besides the great opportunity to connect with these people, and it really hasn't happened to a great degree, at least not what we're seeing in our surveying, is the clarity. Like everybody for years wondered, what are the millennials going to do as they grow into investing? And what are these new investors, these 10 million new investors that came in? And it's clear they're going to be very involved. They're going to be very involved. They're not going to delegate away, as other generations have, all the financial decisions. They want to be educated. So education and literacy is key. That's why delivering content in video is key. They're going to validate advice. They value advice, but they're going to research it, validate it, and they're going to collaborate. So they need collaboration tools. They need personalized materials or content, however it comes to them. And they want to have frequent communications, because this is the age of texting, right? They all grew up very comfortable with technology, and they're going to compare their life experiences to their financial experiences, and the firms that can deliver that are going to win.
What does a social media strategy look like for an advisor?
Well, I think it first starts with getting approval from the investor or the prospect to have access to their social media, because then that opens up the ability to apply analysis and artificial intelligence to that. So it goes the whole spectrum. It's not going to be a single dimension. Not everything is going to come through a firm's website. Not everything is going to come through Facebook. Not everything is going to come through video. There's got to be a lot of flexibility by understanding the client's preferences and their behaviors. So, they tend to look at things on Monday afternoons versus sending them something on Sunday morning at 6 a.m. So it really depends. And you need the science to be able to deliver something that's relevant and in the right time and manner.
So that's interesting. I think you answered that in a different way than I asked, which is great, though. I was thinking, how does an advisor go about getting on social media, and what does that strategy look like? What is it, simply posting content, what have you? But were you kind of referencing actually reading their clients' social media posts and somehow interpreting that in terms of what they're thinking and the like?
But they could do it a variety of ways. But I think it kind of goes back to your very first question when we started the podcast. What are the types of advisors out there? So advisors that tend to be in a big wirehouse firm, those firms tend to dictate how you do things. They build things. They have a methodology that differentiates them. Independents, an independent RIA, they make their own business decisions, right? So they may come to a firm like Broadridge and say, I need you to build me a website. I need you to deliver these types of things. Now, they all follow the rules that FINRA has and IROC has in Canada, but they can manifest it differently based on their business, their economics, the way they want to differentiate themselves in the market. So it really depends on where the advisor is located. Is he independent? Is he affiliated? Is he part of a clearing firm? Or are they part of a big wirehouse?
Yeah. Have you seen the adoption of social media being used more for lead gen or client service and retention?
Well, I think retention is the underlying thing that everything you do, right? Because you want to have raving fans as clients, right? Who stay and refer business to you and buy more of your goods. But I think it's predominantly around lead generation, prospecting, what I see.
And a lot of that's going to be driven by content.
Yeah, I think it's content and news, things of that nature. One thing that's clear in COVID is that there's still a lot of paper-based processes in the industry. And through our next generation platform that we're building, we're delivering a highly digitized self-service capability, right? So I think there's opportunity in our industry to be more real-time and to clearly be less paper-based. And I think when you get to a true digital experience like we're building, and you have smart workflows in them, and you embed AI in some of those things too to provide insights. But I think the more you do that, the less service issues you have. And I think that's where the focus is in the industry. And I know that's our focus.
What kind of a lift is it for an advisory practice to go down this path of digitization in terms of technology that they need or resources? Is it a big ad, or is that what Broadridge comes in and helps them with?
Well, I think a firm like Broadridge, we provide tremendous scale to do that. The costs vary depending on the service models you want. Increasingly, you can buy whole packages with a bundle of services, or you can buy a menu of services, right? So I really think it's the preference of the firm and the advisor in terms of what they're purchasing, and the consumer too, because some of these capabilities go direct to consumer also, right? There's a lot of direct to consumer models out there, and I think that will increase.
Now, when you think about the marketing strategy for an advisory practice looking to maintain relevance, what do you think some of the key pillars are in building out a marketing strategy?
I think having capabilities around video, being able to personalize service. I think another key capability is being able to aggregate data. So clients frequently have more than one account. Typical clients, maybe they have a mortgage, maybe they have some banking products, maybe they have credit card debt. And the key to personalization is you need to be able to see the holistic picture. So a key capability that we haven't talked about yet is the ability to aggregate data for a client and then see their whole portfolio and then know their goals, and then being able to pull that whole thing together to deliver personalized service. So the key capabilities are around the data that you've accumulated, the understanding you have of the client of their goals and their dreams and their values, and then putting that all together and being able to deliver it, whether it's video, whether it's on your website, or whether it's on Facebook, wherever it needs to go.
Are you finding that clients are willing to share everything with their advisor, and so that their advisor can take that holistic approach?
Yeah, I think they are, as long as they know that it can be done in a safe and secure way. And I think the technology that we've built is state of the art, where we have state of the art security protection protocols. We're able to bring in all your assets from all your firms, including maybe potentially alternative investments and banking products, insurance. And we can enable the clients to decide how long they want you to have access to that assets and liability information, right? So you could say, I need it just one time, I want it forever. You get to be able to pick that. So we offer a lot of flexibility and choice for clients around that, which I think gives them the security and the trust factors that are really important. So security is clearly a key thing, multi-factor authentication, a single sign-on, all those types of things that you need to really ensure privacy.
For the older generation, has there been any trouble with adoption of the digitization world? I just think about my parents. Maybe they're well beyond the older generation that I'm thinking about right now. Maybe they're in their 80s. Maybe that's a little too far ahead. But
actually, for me, it's right next door. For me, it's coming rapidly. So no, I think the first, my dad's in his 80s, and I'm not far behind, right? And, I embrace technology. I see many people in the older generations use the technology. They use it well. They like it. They're comfortable with it, right? I think the difference is how you handle and interact with your advisor. The more experienced investors, or the ones that have been around longer, they tend to delegate to the advisor, right? Whereas the next generation is going to be more collaborative and a validator. But there are all types of investors in all generations, and we don't target one or the other. It's all based on what their preferences are, and our technology is built around that.
So one other thing that I read about was wealth lending networks and security-based lending services. Can you tell me a little bit about that and what Broadridge is doing there?
Sure. Wealth is not just about helping people achieve their financial dreams and grow their assets, right? There's sort of two other pillars. One is protecting your assets. That's where insurance come in. But there's also lending and optimizing your lending needs, right? Lending has very specific purposes and it needs to be optimized. And we have what we call the Broadridge Wealth Lending Network, which is a highly digitized database capability that enables people to very quickly, depending on the firm they choose, get access to a loan and get the money paid out. What we do is, these are called securities-based loans. They are similar to margin loans with a couple of differences. More assets are able to be borrowed on. There's more discretion around how much could be borrowed. So Reg T in margin is typically about 50% can be borrowed, and there's a list of securities that are eligible. On the securities-based loans, they can be on any asset type, including insurance products, alternative investments, and the amount can exceed 50%. It's really at the lender's decision in terms of how comfortable they are with the risk and the type of collateral. And they're very favorable interest rates compared to other types of loans. So it's very attractive. There's also some tax benefits that could be derived by deferring taking capital gains if you need cash immediately. So this is a very popular type of loan. And what we've done is created a wealth lending network where we're going to connect borrowers with a choice of banks who can bid for that business. And then we can get those loans approved, manage the risk appropriately, and deliver the cash proceeds to the client very quickly. So it's a very exciting opportunity for us. That business is growing rapidly, and we think it's very transformative. And there's a real need in the marketplace for clients to be able to get access to cash when they need it. And the only restriction to it is that you can't buy more securities with it. It was traditionally called a non-purpose loan. So it has a very specific use. It's very popular, and we're transforming the client experience.
What is one long-term trend you see playing out over the next year or several years?
I think COVID has been an accelerator of all the trends. That the digital engagement and the personalization of services are going to continue to evolve. But I think that's where the action is right now. And a firm like Broadridge, because there's so much innovation in the wealth industry, there's an insatiable appetite in the wealth industry for innovation. A firm like Broadridge that can give the wide array of choice through our next generation platform, where you can buy front office, mid office, back office capabilities. You could use your own systems, a third party, or all of ours, and cobble together best-in-class solutions, I think is where the action is going to be. And you have to be able to very quickly integrate into new capabilities as they come available in the market, and our capabilities will act like an advisor app store. So I think those are the trends that are coming.
Yeah, we do a speed round called Trend or Fad, where I mention a few different topics and just get your quick take on it.
Okay.
This one's kind of in line with what we're talking about, but hourly and retainer-based service models for advisory. Trend or fad? Trend.
I think people realize that one fee, they may not use all the services, and they'd prefer to pay as they go.
Yeah. And that provides a practice and ability to address different markets, right?
Exactly. I think people want a suite of service. Some people want all-in-one price. Others want to pay as they go. But I definitely think that's a trend.
And this has been a favorite question of mine. Bitcoin, trend or fad?
Tough one. I think longer term, it's a trend, right? But it's not going to be used in all situations, and there are some complexities to deal with. There's limited supply. They use a lot of energy, right, which isn't necessarily great for people focused on the environment. So I think there's challenges that have to be overcome, and certainly regulation. But I think it is trend.
work from home trend or fad?
Absolute trend. Will not go back to the exact ways of the past. I see surveys in our industry, and I know our firm surveys, that we've proven that we can work from home. It gives our staff lots of flexibility. They are just as productive as always. And as the technologies continue to evolve, it will be even more work at home friendly. The data that we have internally and I've seen in the industry is people want to be able to go back to work maybe 1 or 2 days a week, but they really enjoy the flexibility. And they also want to connect with the people that they work with. But I think it's a definite trend.
And Peloton, trend or fad?
A huge trend, right? I think it's a huge trend.
Did you get one?
No, because I like to go outside.
Mike, this has been fantastic. Thank you very much for your insights. What's the best way to learn more about Broadridge and connect with you?
Broadridge.com has a variety of videos and articles and outlines our products, and included in there is a contact us button. So that would be the best way to contact us.
That's fantastic. And thank you for tuning in to another episode of Trends with Benefits.